Have you ever entered a trade where market broke out previous support and resistance level and you thought, yes, you will have nice breakout trade, only to see that prices revert back again and they start to trade at previous range and thus you have suffered a loss? Well, it happens from time and time again, but there is a way how to actually differentiate and understand which is false breakout and what's real breakout. And this video will show you just that. So let's see how to trade volatility breakouts correctly. Now, first things first, as I have discussed in many of my videos, patterns of markets are really simple. For most of the time, markets have range-bound motion, so that means they are moving in ranges at one way or another. So you could actually make money by making trades at that support and resistance levels. And from no more than 20 or maximum 30% of the time, markets have strong trends, and these trends start with volatility breakouts. And actually, some of the best strategies throughout history are made on these strong volatility breakouts. And they are either made in two cases. One, if they have been breaking previous round numbers or previous highest or lowest prices, depending whether you want to trade or long or short. For instance, markets might break down when prices hit below 20,000 of Bitcoin, or once they hit above 90,000 on Bitcoin, or when they have been making new highs after breaking out previous 30-day high or low. This might be price breakout. And other cases might be when prices have been breaking previous supports and resistance lines, either on strong trend lines or on Fibonacci levels. They may have the same effect, but all of these breakouts have one thing in common. They have been broken by increases in volatility and strong price action of that direction. And this is the difference. If we are talking about range-bound trading, usually volatility, volume and price action is usual. There is no spikes in volatility or trading volume, and patterns are more of the same. But once we have price breakouts, those patterns are changing either at upwards or downwards moves really strongly, and you will always see increases in volatility. And that is the check where you have to spend most of your attention. Now, of course, these moves must be followed by, or could be followed by, specific fundamental events. For instance, presidential election, some instabilities, some financial reports for specific company, or specific fundamental events for some crypto project. That might be true, but they all have to work in synergy. You might see fundamental event, then you might see price action, then you might see this price action have broken previous support and resistance levels, and there is increases of volatility. And if all these factors step back together, then you might have good idea, then you have strong price breakout trend. And this is those possibilities and profit opportunities where you actually should go for. Before I will start to give you some practical examples with this, here's important thing. If you want to see price breakout trading, range trading, trend trading, swing trading across different markets with real trades and with real trade examples, you have to join my Telegram channel, because you will see all of that I'm just saying, and in addition to that, you will get free Telegram signals. You will get exact markets to trade, exact prices where you open and close your trades, and the ways how you could actually trade this for your best interests. And remember, all you have to do is visit my link below the video and join me. It's free, you join, you're all set, and you could start to trade right away. But now let's continue. Okay, let's start our trade examples with S&P 500, and now I will show you volatility breakout at markets going downwards. So here we had downwards move, and then we hit support line. So we have, I would say, prolonged range motion. Previously here we had nothing interesting, simply markets moved at some range, and then we found support and resistance rightly at these levels. So here. I didn't show the resistance line because we didn't trade on it, but you get an idea. So here we had the floor. The question is, should we see floor here as well? Here's a couple of arguments why we should see price breakout downwards. Firstly, we had strong price action, and actually those candles increased in their movements. And if we compare this one, where we also could see similar pattern when we have simply downwards move, here we had way higher volatility. That means we simply dropped here as a rock, and volatility only increased, and we had strong bearish candle patterns. So consequently, we also hit that support line. So here we had support line, here we also touched it, but now here we hit it with real confidence. So not only we were below previous two price support line, but we hit it lower. We hit it lower with way higher volatility, and volatility was increasing, but we also had consistent bearish candles. That means markets are really low. So in this way, we could only go short, and as you see, we had nice short trade. So that means depends on how we actually could try to fit it in. Yes, but we made, even if we may making stop loss level as large as all previous range levels, we will still have take profit levels that could be a couple of times higher. But in rational sense, we probably should be making stop loss at half of a previous range market. So that means we could make 2 or 3 times our initial risk in this short trade. So this is how it works. We are going short. And now let's see very recent example of price volatility breakout at long trade. So now we see that market had established good resistance line. Markets actually went here and it simply hit 5,887 level as some sort of roof, and every time market to try to go higher, well, it simply went back. But here's the thing, while we had a couple of reasons it might be different this time. Firstly, well, besides obvious fact that it actually broke previous level, it actually had really strong candle patterns upwards, so there was no signs of weakness. Firstly, candles were entirely bullish. Secondly, you see this increase in volatility. It outmatches every previous levels of volatility once we had that resistance line met. So that's second thing. Yes, and of course price moved along that way. So we had 3 factors. Firstly, obviously prices hit that resistance line. Secondly, we had huge spike in volatility, and thirdly, we had bullish candlestick patterns. So also here depends how we defined it, but here probably this previous range was found somewhere here. So this was previous range. We could actually put stop loss as long as the previous range itself, and still we will make 2 or 3 times more initial take profit than we had stop loss. Or in other words, even if we were really conservative and made huge stop loss, our risk reward would be 3 to 1. So this would be really good trade. And actually here you could see downward pattern as well, but I wanted to show you different examples for bullish and bearish price breakouts, so that you have some difference. But yes, here's the example, and from these 2 examples we had to have good conclusions. Firstly, obviously when there is strong support or resistance lines, if prices have been broken, that's one criteria, because in one way or another previous level, and if it's hit with strong price pattern, that's even the better. Secondly, patterns of both bullish and bearish examples were with strong candlestick patterns, so they were either strongly bearish or strongly bullish. There was no obvious way how to mismatch it or didn't see it. You could simply see it. Prices were going higher or lower, and they broke up previous support and resistance lines. And thirdly, there was huge increase in volatility. So all these 3 things aligned with each other, and they confirmed that there were price breakout. And even if we were having really large stop loss level, even then our take profits will be 2 to 3 times higher our initial risk. So this is a good example how price volatility breakouts work. Do not overcomplicate it. You have to simply see where there is strong price action, where there is strong support and resistance lines which are broken by this strong action, if there is strong price volatility, and even better if there is general market direction at that movement or strong fundamental events which trigger this move. Then you have all these criteria, then you put stop losses and take profits conservatively, and even then you will have good trades. And this is how it's done. This is how this is done professionally. And if you want to trade like this, make sure you are watching all of my content and you are joining my free Telegram channel. Stay tuned.